Hello guys, glad to have you on board again today. Even though we're not going to talk about the US because once again there's absolutely nothing rational about this sector right now. We're going to talk about the dollar index scenarios who got all invalidated obviously. It was kind of pending and I was somehow expecting this to show up even though I never thought it would be possible. It is there and in front of us. So in today's scenario, we're going to talk about this and dig a little deeper on what to expect about the dollar in the forthcoming weeks. First of all, the breakout is still pretty much dangerous and not followed by some technical indicators. So I wouldn't consider this as a valid breakout, or I would say this is not a low-risk breakout. So this one could very well be invalidated without a single problem. But still, at the moment, what gathers my attention is the German index showing some very weak signs out of a freakingly dangerous outburst of more than 9% just out of nothing, and nothing more to say, even worse than expected economic data. So the data is deteriorating even further than the anticipation, and still we just made 9% out of nothing, out of nowhere, without a single goddamn reason. And it is not like it was a bottom, because the bottom is in here, and it's so of course very freakingly stupid as we're 20% off the bottom, just like we've gone out of recessions. No, it didn't nearly got too close to this, and moreover the statistical data is still pretty fucking much heading toward some bearishness to come. So the problem is we still have opposite directions, opposite feelings out of investors. They're definitely not getting into this bull market, but still the prices are doing it. So in here we've got a conflict of interest. Do we follow prices or do we follow our own convictions? I need to be fully honest with you guys. If you think this is just one of the two that can drive any rational decision-making process in a statistical advantage kind of risk management, which I'm trying to teach you guys, then you really got it all wrong, because I've been clear since the first fucking day I started to learn you guys how to trade. What we trade is not what you think. What you trade is not what you see. What you trade is both what you think and see. You cannot trade without understanding what the plan is. If you do have a plan, you need to stick to this fucking plan. But still, you cannot trade this fucking plan if technicals are not going accordingly. So right now, the technicals are bearish. The technicals were bearish. The prices invalidated those bearish scenarios, and still I have this bearish bias. I have this bearish feeling, and I have this bearish scenario in the back of my head. The thing is that prices didn't work accordingly. I had the two things I need to trade: technicals bearish and bearish vision of the market, bearish plan, bearish scenario. So obviously I had to take those trades, and I would do it again and again and again if it was to be if it was to be done all over again. I have absolutely no regrets, and I wouldn't even nearly change any fucking thing to what I've been doing so far. Even though it ended up with a loss, still the story is freaking far from being over. But still, the problem is, do you need to keep on fighting this? No matter how irrational this is, no matter how long it's been lasting. There is a famous sentence in trading that the market can remain irrational longer than you can remain solvent. And this is exactly something that you may have to learn from the hard way if it has to be done today, or this lesson every fucking trader worldwide had to learn it, and generally the hard way. We all fought the market at some point. Some of you may be doing it right now. You'll have to learn it the hard way. Hopefully it's not going to bring you down, because I don't nearly hope it should be like that. All I can tell is that if you fight the market right now, you're fighting one of the fundamentals I'm trying to teach you in here. You don't trade when just one of those two major pillars are standing. You might be deeply convinced that this market goes down, just like I am. But still, if the technicals doesn't come along, you can't do this, because if you do, you're somehow gut trading. That doesn't mean that you're gut trading like you were when you started trading, because normally most of you guys are a lot more educated right now. So you're not gut trading. You definitely have a better feeling than the average 50-50 you could have when you were discovering how to trade and when you're making your first trade, where it was basically like throwing a fucking coin and a 50-50% odds. So the thing is that right now you might have a better sense, sixth sense about the markets going up or down, but still that's not going to be enough. You cannot trade just because of what you think. Even as an experienced trader, you're not going to be able to do this. Even professionals always use safety belt. That's exactly what I'm doing. I mean, my indicators, I can basically predict them. So why the hell do I still use them? Simply because they're my safety fucking belt to prevent me from trading something I would like to see, even though it actually isn't like that. The indicators are cold-blooded. When I make a bad decision, when I go against the indicators, I generally end up with a loss. So they're just here to prevent me from stupid losses, because sometimes, like every fucking human being, I'm intended to trade what I want to see, which means I have a strong bias and I will simply avoid the bearish signals and just focus on the bullish ones if I want to buy, or the opposite if I want to sell. That's normal to do this, but still you cannot avoid. I wanted to see bearish signal, I saw them, I traded them, but the market decided to push through them. And that's important. That means the bearish signals were absolutely not traded by the consensus, the market itself. All right? The thing is that it's been done in very low volume, very stupid context, and kind of a manipulated somehow market, or I would not call that manipulation, but let's call that the bullish inflow of money. Doesn't seem to be an investor inflow. It's most likely share buybacks and the same old stupid retail traders loading in ETFs. So still very dangerous, because that's not the kind of money I want to follow. I would like to trade according to the smart money. But what I'm going to get to introduce today as an additional layer of understanding that you guys need to have is that in the market, it is not black and white. Like I said, it is not just about buying and selling. There are different layers of buying, different layers of selling, but still, there's also a very important third action, not doing any fucking thing. And that's really important, because that doesn't mean, all right, like we said earlier, there's going to be two major pillars. What you think, what scenario you think is the most likely to happen, and this is obviously subjective analysis, because what you think is proprietary. I think something, you might be thinking different. Like I said, this is bullshit, because any fucking way, what you think is not necessarily what's going to happen, and you cannot trade just out of this. So this is why we have technical on the sideways, but still, the way you're going to read technicals is always going to be biased, because at any fucking time you'll have bullish signals and bearish signals. You just have to have a bias. It's absolutely necessary. This is why if you think technicals will teach you what to do in trading, then you got it all wrong. This is not how it works. You need to build yourself a conviction. Hopefully not because of what others are saying, but most likely what you personally think. If you think the market is about to nearly collapse because we have been late stage trending and doing some shit about the credits and things like that, then good for you. You and I have the same feeling. That doesn't mean it's going to happen, but that means you will select the bearish signals only and avoid the bullish ones. You have a bias, that's good. You have a goddamn plan. That's all I'm asking you to do. If you have the opposite vision than me, and you're thinking the market still has 3 to 4 years of bullishness to still go ahead, then good for you. You're just going to do the opposite as I do. You're going to avoid the bearish signals, or you're going to take them as profit taking, and you're just going to manage your risk on these signals, and you're going to trade the bullish signals. It's simple as that. And the worst in this is that both you and I will probably make money out of the market, just because not we were forecasting magically the future and being proven right. Who gives a shit? It's just that you traded according to the two major pillars. You had a conviction, you waited to have signals confirming this conjunction of elements was also other players doing it just like you do. You weren't alone doing this. You won or you didn't won, or you were true or you were false. In the end, who cares? As long as you respect both pillars trading in the same time to trigger a trade, then normally you do it just fine. The problem is, as I said, right now I just have one pillar. So what the fuck am I doing? Am I buying or am I selling? I know I'm never going to buy because that's a choice I've been making. I stand for this choice, I'm not going to switch, I'm not going to go bullish, it's not going to happen. I'm only going to sell. But does that mean I'm selling every time? Obviously fucking not. Otherwise I would be ruined by now. So that's not how it goes. You sell on some specific timings when you got some fucking signals. Without signals, you don't trade. Do I have signals at the moment in the US? No, no way. All I have is potential intraday signals, and they very well got invalidated very fast. They drop a bit, get to the first profit taking, and the rest of the trade is flushed out almost instantly right after. So the thing is that the market still doesn't want to go down. Whether you like it or not, that's how it goes. And this is what the technicals will see. This is what the technicals will manage, the risk management. What you think is personal. And like I said, if you're bearish just like I do, you must not be in trading right now. Because on swing trade, it's not possible. Where the hell do you see 4-hour signals or daily signals on the US? There's nothing like that. Still, yesterday I've been sharing you this DAX scenario, and I told you the daily chart was trading in very, very interesting area, the 61% Fibonacci retracement area. And like I said, I'm probably going to trade this a little bit more aggressively, and obviously I did. So I sold the German index, and it's doing fine today because I can see this 4-hour chart signal. Still no triangle, which is a little bit of a bother to me. I would have liked this one to be more bearish, but it still isn't. So far, we still have an exit signal. So momentum is signaling. We're lacking of a price signal. So I don't take this as a granted scenario. But still, so far, this one does great. What I would like to see right now is the DAX keep on falling, and mostly I want to see this one going down this trend line. I want to see this trend line not holding up prices, going below, and if we could have some final bearish reaction out of this and breaking through the context boxes. So this boxes is going to terminate at the end of April. These are monthly boxes, so we still have a little bit of time to go. If we could manage to be below the contexts by the monthly candle close, that would be a good signal that the stock market in Euro area has been topping up. And if it has, how can it be any different with the US stock market? So it's not because we're just 0.20% out of historical highs on the SPX that we have to do it. If you think it that way, then it is just as stupid as it could be. What the market is supposed to do is to price in risks and potential future forecasts for profits. So for now, everyone thinks the profits are going to be great years from now. If they're not, they're going to have to suffer the consequences, which means the risk will show up, the price will drop. That's exactly what I think is going to happen. Still, so far, prices are proving me wrong. All right? So you really need to get this right. I'm not going to buy, but I'm not going to sell until I have clear and clean proof that the market has been topping up. I want, first of all, the volatility to pick up, which it's exactly doing at the moment. I want the market to break through this level. All right, see, if VIX is managing its way up to 15, I would finally be able to say, oh my God, finally they're pricing in the risk after so many weeks of stupidness. That doesn't mean it's going to end this way. All it says is that now you can see real time. We've got the goddamn target 4-hour chart, so you can definitely put yourself a goddamn alert in here. Anytime we go there, you'll know that the stock market is very likely going to find another fucking bottom. Why? Simply because no one is trading the SPX anymore. People are trading the SPX out of two ways, the goddamn volatility and the momentum. So like we said, the momentum is great. The momentum is, oh my God, that's exactly what people are trading at the moment. Let's have a look at the SPX. I've been deleting all the US stock market from my watch list because I don't give a shit. I mean, this is no longer a market to me. When you see Microsoft gapping up 5% out of what? Expectable results? No way. When you see Facebook, I mean, gapping 7%, like the Cambridge Analytica problem just was, it was the old days. Facebook business model is not going to be fucked up years from now. It's definitely going to be a strong company. Let me tell you, Facebook is definitely not something I'm going to put any fucking dollar into for the next 10 years. And I'm probably never going to buy this because I think this is over. This was the latest decade thing to be into. Now it's too late. So it's not about time to buy Facebook anymore. You just let it go with this. They want to drive prices higher for a bit. Let them do. There's nothing to expect in here out of 10 years return. So this is not something you want to have long-term in your portfolio. Most likely something you want to sell to whoever is stupid enough to buy it at the current prices. Regarding the other stuff like the Visas, the Amazon, the Boeings, I mean, Boeing is definitely the worst thing I've ever seen in my 10-year career. I'm still not there 10 years. No, let's be honest. I'm more likely 9 years right now. So I'm going a little bit too fast in here. So Boeing, I mean, the results are shitty, shitty as hell. But still, look at that. We're not moving a goddamn thing. So Boeing just basically missed on the revenues, missed on the EPS. They have absolutely no guidance. They've been basically saying, okay, we might give you a guidance by the next quarter because at the moment we cannot really do anything. So no guidance, bearish revenues, and still we're trading at freaking fucking year-to-date bullish results. So on a year-to-date basis, we're higher, still nothing suggests we should be. So there is a huge problem in here, huge problem about valuations and the market rational behaviors. We shouldn't be trading that irrational, and moreover, we should be, I can understand the market paying for good news. I cannot understand the market not selling for bad news, and this is definitely a bad news about Boeing. We shouldn't nearly been there. With Boeing, we should have gapped down 5 to 6% today. But still, nothing. Tesla, same shit. I mean, what the fuck are we doing out of the support area? So we're breaking them right now, and that, I mean, it's a fucking pain in the ass. We should be right here right now at the moment, so I don't really get that. What the fuck is happening with Tesla? I mean, this guy has been selling us profits for 5 years. He's been doing 2 quarters of profits, and now we're even worse than we were a year before. So it's definitely not working. No matter how if it's trying to sell us automated cab system or whatever the fuck it's been trying to sell, yes, it might be the future, but the future in 5 years, and you're not paying 5 years future right now at some stupid prices when the company doesn't even make to have a cash flow. They're just having an enormous shit pile of debt, and it's just going to get worse and worse. And moreover, if we get into a recession, it means credit is going to be even worse than it was. I mean, the credit system will obviously have to be harder than it is right now, which means they'll have to leverage some money, they'll have to do it like a junk bond, and it's going to cost even more than the debt load they're currently having. So this is where the actual problem stands for Tesla. That doesn't mean the company doesn't do great cars. They do. The problem is they need a technological breakthrough to have a viable long-term battery production system, which they don't. And they need to deal with the debt. In order to do this, they need to have freaking positive revenue, which they don't. So something goes wrong, and it means it's overpriced. That doesn't mean the company will die. All it says is that too much dreams, not enough cash to do it, means the valuation will probably drop. They may have to rise from ashes, and I definitely stand on that. Tesla is going to be a buy on the next economic cycle to May, but not now, and certainly not because of selling cars, because Chinese will sell the cars, Tesla will eventually sell the software, and there's a lot of competition in that sector. So thinking Tesla is the leader because it has a lot of pilot data and everything like that, that's a dangerous bet on the future. And if I were ready to make that call, I'll do it, but certainly not at the current prices. I'm definitely been clear with that. I'm buying Tesla out of 140 boxes. I definitely think it's worth the risk at this price to definitely try the game of Tesla being the future AI system to sell driving cars. But yeah, definitely in that perspective, there wouldn't be a lot to lose for some big gains to come. But right now, you may risk a lot to lose for not so much to gain. So that's the problem. You're not buying because you like Tesla. You're buying Tesla because you think it's worth the price of the risk. The problem is, the question I think right now doesn't nearly fit any such answer. I think there is gains to make in the future eventually, but not right now, and the future is not counting in quarters, but most likely counting in a few years, and still there is a pretty big risk underlying this, and I think reducing the risk by reducing the price is the only way this asset can be called a buy. Simple as that. So future will tell, because once again, so far all I've been saying just ended up being wrong. Just look at the dollar, right? Like I said, does this looks like a bullish market to me? No, but still, what does happen? Bullish breakout. So the thing is that we've been breaking an horizontal level, all right? We've been holding a candle close. There is still some option in which this can be just a fake breakout, like a doji candle today and a bearish engulfing tomorrow, creating some kind of an evening star structure throughout the resistance, basically saying, oh, we go there to fuck up some stop losses, mine included, obviously, but it doesn't go any further than that. We reintegrate, and obviously we're going to try breaking the opposite side right after. So the big problem we're facing right now is that I don't nearly think that what's happened must be followed, but still, do you still fight that? To me, the answer is no. I'm triggering my stop losses on Eurodollar and all those shits, even though I don't like that, even though I think it can easily be reversed in the forthcoming days, I cannot say for sure. So I'm just going to wait for this to play its game. I'm glad to see this signal today, and if it can be confirmed by a tomorrow signal plus an bearish arrow, then I'll sell this shit again. But do I have to hold the signals as we clearly broke through this level? No, I don't. Like I said, we might be invalidating some bearish signals that I was trading according to my bearish vision on this market. So I was just following a goddamn plan. I was just risk limiting and doing my goddamn job. Future will tell. Maybe I just got stopped out of the market top and I'll have to sell a few days from now, or maybe even today or tomorrow. If that's what's about to come, no problem with that. I'll sell again tomorrow. But if it doesn't work out this way, if the market keeps on pushing stupidly, what the hell is going to happen? You're going to end up broken because you fought the market, because you were trading your own personal convictions aside from every fucking technicals. The bearish technicals we're playing in there, we're crossing through them. It can be fake breakout, but who fucking knows? We don't know yet, so I want to see prices making and showing me that this was fake breakout. Then I'll get in again with a new risk management and with a new scenario. I'll just restart it, the previous scenario, but as for now, it isn't possible to do this instead of just gut trading. I feel it is a fake breakout, so I'm going to maintain my bearish positions open. No, it's not how it works. If you do this, you're going to dangerously face some problems in the future. And the actual answer you need to get to this, the actual conclusion, and I'm going to stop in here because there's no more to say today, is you may be proven right by doing this once, twice, 3 times, 4 times. By just fighting the market, you will probably be proven right many times. But it just takes one time to fuck up all the gains. And that's not how you do. All right? You don't risk it all on a single trade. And when you start fighting the market, there is barely no limits. But the time you can hold your account. And at some point, it's just one time that fucks you up so hard that the entire account will disappear. You go margin call. And that's not something I wish you guys, because that's the worst case scenario. You'll be pulled out the exit door without even knowing why. But the only thing is that you're going to say, that was irrational. The market should never have done such thing. Guess what? In my career, so many times the market have been doing some stupid shit. It never has been lasting that long, that what's happening right now, but still, I was barely trading some intraday trades back then, so I was far from doing swing trades. So I've never experienced this because I've never experienced long-term market reversals. So it might be the first one to come to me, but still probably not the last one in my entire career. I mean, probably if we do end up this economic cycle and have another economic cycle ending in 5 to 10 years from now, then I'll know it. I'll remember what I'm feeling today. The thing that the market was so irrationally and durably, exuberantly stupid. But I'll knew this feeling. I'll have it in my mind. And the next time, I'm definitely not going to trade like I did. But nowadays, did I have to do any different? No. I had to go straight into the rabbit hole, even though it ended up with a loss. I had to do it because that's what the strategy tells me to do. The strategy has been bringing me a shit ton of money. It also brings up some losses. And it's part of the goddamn job. Now, if you think that the technicals are just wrong, and you're right, because you feel it, because you think it, because whatever shit this is that you may think it's rational, then let me tell you, it's not going to end well. Probably not today, maybe not tomorrow, maybe not a year from now, but if you repeat that experience day after day, anytime you got to face some irrational market behaviors, then believe me, someday it's going to be so irrational that you're going to lose it all. And my job in here is to teach you how this goddamn job works. This job is not something you see out of tomorrow, out of 1 week from now, out of 1 month, or even a year. It's something you must be projecting yourself ahead of 10 years. all right? Because if you want to think of it like a job, even if people are switching job pretty rapidly right now, and if you have some children, then you might be aware that those kids will probably change their jobs 4 or 5 times in their entire life. They'll have 4 or 5 different jobs. So even you might be doing something different in 10 years from now, but still, you must project yourself ahead of 5 to 10 years. Because if this is a job that you expect to make out of trading, then don't be short-sighted. You really need to be long-term sighted. And it's important for you to see this. So if you think fighting the market is what you need to do today, yes, but it's something that will most likely kill you within the next 5 years. So don't do this. See out of 5 years, even how painful this could be, to just take an irrational loss and say, I needed to stop fighting this market. And even if the market end up reversing today, and saying, oh my God, I just been stopped out of the market top, I should never have listened to this guy, he's just an asshole. Yes, all right, think it that way, any fucking way. I know what the answer is. I know that you can prove me wrong today, but no matter how, no matter fucking what, with time, I'll always be right and you'll be wrong. Simple as that. I have more experience than you guys. I've been to where you're going right now. I've been there. I know how it feels. I know how painful this can be to accept taking a loss, being stopped right at the market top. What's important in here is the lesson you take out of it. This lesson will be your success months from now. It's a process. If you fight, you're going to lose. If you learn to surrender at the moment, you'll learn a very painful lesson that yes, you might be stopped at some market top at the moment, and that doesn't prevent you from selling 2 days from now. You really need to understand that you cannot trade without price confirming what you think. Prices is what matter in here, all right? We try to risk limit what the price will do by trading in some specific timing, with some specific risk limitation, into specific areas. We do anything we can to limit the risk. That doesn't mean the risk cannot just fuck you up for a few days before going back to normal. And even though it lasted for almost 2 months of pure stupidity in Wall Street, it can be another 2 months without problems. And what happens if you keep on fighting tomorrow and the day after tomorrow and the week after and the week right after and the month right after? You're just going to end up freaking fucking margin called. And that must never happen, because margin call is the exit door, and you must make sure this never happens. Even if that means taking big losses at some point, take the lesson, learn the lesson, don't reproduce the next time. By the next time, you'll close your losses earlier, and you'll just be a better trader than you were today. Simple as that. Anyway, so I'm going to leave you guys with this. And once again, if you still have this in the current risk management, which means if your plans were accepting prices to go that high, then you just don't change anything. You don't stop an ongoing plan. If your stop losses are 5% on top of the historical highs, and if you're still selling, just keep on selling. I see absolutely no goddamn problem. If that was your plan, just stick to fucking it. The thing is that as long as you traded some signals, as long as the risk management is according to what you expected to trade and to take as a risk management, then just let it go. I had a plan, I were way too aggressive, and obviously the market took me down the corner, and I done every fucking thing I could to just surrender, to just not surrender, but I had to. And nowadays, what am I doing? Just nothing. I'm watching this, and until I have clear signs that the market is reversing, which means the VIX going up, the dollar reversing down, I can't do any fucking thing. All right? So, like I said, I'm not even having a look at the SPX. It's no longer in my watch list. I don't give a shit about those markets as long as the VIX isn't breaking through the racing top, and as long as the dollar is trading on top of this resistance, I'm not goddamn trading those markets. All right? I'll see you guys tomorrow. I didn't have time today to cover up the MCQ test corrections, so we're going to keep this for next week. Because I don't nearly think I'm going to have the time tomorrow. So probably next week we're going to deal with it. All right? Wish you guys a good day. Trade safe. Remember that if you want to trade bearish in Wall Street right now, if you have a bearish bias, then you must do it intraday, which means you really need to profit take rapidly and manage your risk on intraday time frames. And if you want to keep and spare 50% of your trades for longer swing trades, you're granted to do it, but do it carefully and don't forget to secure those goddamn trades. As long as it hasn't been proven right for the bears, we're still facing bullish risks, which means prices are very less likely going to go lower unless they have a reason to. Right now, we're waiting for something that pushes price down with a good reason to go lower. For now, we've got nothing of those two, just waiting for prices to show something.